Okay, just first of all, I'd like to thank you for coming along this morning. I'm Lisa Rowder, now I have to remember my title, Group Executive Director for Performance Audit in ANAO, and I'm just representing Rona here today because she's travelling. Thanks again for coming, and also for the 15 people that are joining us through streaming. And it's a really good opportunity for us as the ANAO to speak with you. But also for you, hopefully, to get together and share some of your challenges and solutions, and also give us feedback on perhaps what you'd like to hear through future forums or through some of our insights products. So today with us we've got Tom Ianu, we have Jocelyn from our data analytics and IT audit area, we've got Clea Lewis from our financial statements audit, Michael White, who's leading our performance statements audit work, and Carla Jago who heads up our financial statements audit. And Jane Mead. So I had you listed here, I just glanced over you, who is our standards expert and heads up our PSRG group. But we'll introduce each of those speakers again as we go through. So just for your information, I think bathroom facilities are out the doors across the foyer to your right. And I'm assuming exit facilities exit in an emergency are the same way that you came in. So we'll have a break for about 15-20 minutes in the middle today, and we'll finish at about 12. So before we begin, I'd just like to start this morning by acknowledging our traditional custodians of the land on which we meet today, and paying my respects to elders past, present and emerging. I extend that respect to any Aboriginal and Torres Strait Islander peoples with us today. So it's been a really busy and interesting year for the ANAO. As part of our core function to perform audit work and provide reports to the Parliament to support accountability in the Australian government sector, we are in the process of finalising our end-of-year report, we call our CFS, and Clea's going to talk to you a bit more about that today, and Carla will give you an update as well. So far this financial year, we've published 13 performance audits, and there's another 36 to come before 30 June. In the throes of developing our work plan for 2019-20, thinking about current and emerging risks across the public sector, areas requiring further improvement in public administration that would benefit from continued audit focus, and areas of substantive government investment and policy change where useful lessons can be identified and shared. We've had a significant focus on our quality framework, including external review by the Australian Securities and Investment Commission, and Jane's going to talk to you a bit more about this. Our quality framework is a really integral part of the ANAO. It provides us with a set of boundaries and rules and expectations under which we undertake an audit. It provides you and your organisations, as well as Parliament, with that assurance and trust that the ANAO is meeting quality standards and ensuring that our work is evidence-based. And our review process confirms that the findings and conclusions are aligned with the evidence that we have. We also have a data analytics pilot that Jocelyn's going to talk to you more about, which is starting to show new opportunities that we're excited to share with you. You may have heard in the media reports around Section 37 and the impact that has had on the ANAO and our reporting to Parliament. And Tom's going to talk to you a bit more about this and our processes for working with entities to deal with sensitive information that inevitably comes up in some audits. Tom's also going to talk to you about the recommendations from the review of the PGPA Act that are of relevance to the ANAO and our audit work. We continue our performance audits of performance statements, and Michael White's going to share with you insights from the latest audits that we've undertaken. And in relation to performance audit, we're continuing to develop our approach to key learnings and audit insights, and I'm going to talk a bit more about that later. So first, I'm going to introduce Clea Lewis, Executive Director of the Assurance Audit Services Group, to talk to you about financial statements audit process for 17-18.
So thank you, Lisa. So good morning. So as Lisa mentioned, I'm going to be presenting on some highlights from our end-of-year report to Parliament. We expect that this report will be tabled in the first few weeks of December. It provides results on our mandated financial statements audits for 2017-18. It's the second report to Parliament that we've presented this calendar year, and it also includes a chapter on the CFS, which Carla is going to speak to you about after me. So, wrong way. So, some of the highlights, we've issued 241 audit reports. We've issued 90% of those reports within 3 months of the year end, which is an improvement for last year where the percentage was 87, and that we had 159 audit findings, which is an improvement from last year where we reported 222 audit findings. In the report, we've also provided some additional analysis on the timeliness of financial statements reporting, unadjusted differences across all audits, some analysis on the tabling of annual reports, and our usual piece on financial sustainability. So under the heading of quality of financial statement preparation, we looked at which entities provided statements in accordance with the timetable that are being agreed with the ANAO. You'll recall that during the audit cycle, we asked you all to agree audit timelines with your audit teams, and we recorded the date that you said you provide statements and the date those statements were provided. So we had a really good result. 82% of entities provided their financial statements, their first full draft of financial statements in accordance with the agreed timetable, and then another 9% provided those within a week. So this is a good result. We'll continue to monitor this in the future. In terms of unadjusted audit differences, we, for the first time, collated across all audits the total number of adjusted and unadjusted audit differences. The CFS team consider those audited differences for material entities and other audit differences which are above a clearly trivial threshold for their purposes. So the number of audit differences considered by the CFS team decreased from 129 from last year to 57 in the current year. Again, this is a really pleasing result. And the total number of unadjusted differences across all entities was 91. We, again, are going to continue to monitor and record this information going forward. The graph on your screen is a graph that shows the Senate estimate dates against annual report tabling dates. So in response to the PGBA review recommendation that there might be earlier tabling of annual reports, we've done some analysis of when annual reports were tabled against when the audit report was issued and also against when the supplementary budget estimates hearing date was. So what the graph shows, the line in the centre is the Senate estimates hearing date, and to the left of that line are all the entities that tabled prior to their supplementary estimates hearing date, and to the right are all the entities that tabled after that date. So if you add up all the percentages to the left of the centre line, there's 64% of entities that tabled prior to the supplementary budget estimates hearing date. What we've noted in our report is that RMG 135 outlines that it's best practice for annual reports to be tabled before the supplementary budget hearing date if that hearing is in October, or if they occur prior to 31st of October is what the guide actually says. And for the purposes of this analysis, what we've assumed is that all entities could be called on for Senate estimates, and for that reason, where the entity didn't have a hearing date, we've used the portfolio hearing date. So just some additional key highlights from this analysis. We found that 54% of annual reports were approved by their accountable authority, or the board, as the case may be, within 10 days of the audit report being issued. The average time for approval across all entities by the accountable authority was 15 days. And the average time between the approval of the annual report by the accountable authority and the actual tabling date in Parliament was 29 days. And then finally, as mentioned previously, 64% of entities actually tabled prior to their supplementary budget estimates hearing date. This was a new piece in the end-of-year report this year, new analysis. Financial sustainability. We always provide some commentary around financial sustainability, We comment on material entities, on surpluses and deficits averaged over 5 years, and also on balance sheet strength, liquidity and gearing ratios. So in the report this year, we've noted that 18% of for-profit entities and 11% of not-for-profits had large average deficits. We've made specific commentary for those entities in the report, and we've also commented on 40% of not-for-profit entities that had large surpluses. In respect of our balance sheet analysis, we found that 75% of government entities had strong balance sheets, and we've provided some commentary on some entities with less strong balance sheet positions. And then finally, our audit findings. As I said at the start, we had 159 audit findings, a decrease from last year where we had 222, so this was a really good result. There was 1 significant, 18 moderate, and 140 minor findings. So most of the decrease was in the area of minor findings. And similar to last year, we had 84% of the significant and moderate findings were in the areas of IT controls, primarily around user access and privileged user management, and compliance and quality assurance frameworks, supporting program payments, and lastly, management of non-financial assets. So there was a slight decrease in moderate findings this year, and that primarily was a result of reduced findings in ITGC controls. So they're the highlights from the report. Happy to take any questions, if anyone has any questions. And if not, I'll pass over to Carla to talk about the consolidated financial statements.
Good morning. I'm actually going to talk through a few things related to assurance audit. So I will give you an update on the audit of the consolidated financial statements of the Australian Government, but also a little bit on readiness for the new standards that are coming in, and to feed back to you the feedback you gave us coming out of our recent client survey. So I'll start with the consolidated financial statements. So the Finance Minister signed these on the 15th of November, which was, I think, one of the earliest dates ever for signing the whole of government accounts, and the Auditor-General signed the next day on the 16th of November. Our audit report on the CFS includes key audit matters this year for the very first time. So a number of you that are in entities that appear in our controls report, our interim report to Parliament, you would have had key audit matters in your audit reports for 2 years now. This is the first year we've done it for the CFS. So all of you in this room contribute to the CFS because the information from every single entity in the Commonwealth is consolidated up into those accounts. So thank you for all of your efforts in helping us to get there in these timeframes. I thought I'd just mention a couple of things that Finance and ourselves noted through the process. So around the supplementary reporting pack and CBMS data, you're likely aware that the supplementary reporting pack changed a little bit this year, and so not everything was necessarily in the SRP. Some of it referred to reports you had to extract from CBMS. What we noted through that was some quality issues, particularly around any maturity or ageing analysis. So it was quite stark when we looked at things like employee entitlements, where some entities had everything sitting in current, some had everything sitting in non-current, and others had a spread. So Finance and ourselves have discussed this, and you can expect some more guidance to come out from Finance to all of you on areas such as that, to try and get some consistent definitions as to how they would like that information entered into CBMS and the SRP. What that means is there may also be some minor changes to the SRP for next year, so Finance will be in touch with you about that if that happens. In terms of our audit expectations for auditing the SRP and the CBMS data during this next audit cycle, I think it's likely the audit teams are probably going to ask you for some more supporting information. So if you've run a report out of CBMS and that's what you're signing off on in the SRP, they are likely to ask you for that report and to see how you've gotten comfortable with the numbers in that report. We'll also be looking at quality assurance processes around the SRP and the data going into CBMS, so we can be comfortable with what's going in. Another thing we noted this year was around unadjusted differences. So Claire just mentioned that there was a quite large decrease in unadjusted differences, which was fabulous. So it decreased both in number and also in dollars at the whole of government level. So that was really pleasing. I will note here, CFS actually adjusted all of your unadjusted differences in the CFS. So we gave them details of all the unadjusted differences from component entities above their reporting threshold. They then adjusted all of those in the CFS. So the more you can adjust at your level, the less they will have to do at their level, because they've told us they're committed to continuing to adjust for all of those going forward. Opening balance adjustments. There were a really large number of opening balance adjustments that were put through this year, and a number of entities only gave those to finance really late in the piece, so it was quite hard for finance to manage. So I just encourage you that if you do have any opening balance adjustments, prior year errors, things like that, please talk to finance as early as you can, just so it helps them plan for the process. The other interesting thing I thought I'd mention for CFS this year was we did have some new entities, and one of those was Snowy Hydro Limited, which became 100% Commonwealth owned on, I think it was the 29th of June. So we had a couple of days worth of transactions, but all their assets as at 30 June and liabilities came in. So that was a different part to the CFS process than we've had in past years. On readiness for the new standards, I'm sure all of you are aware of the new standards coming in, but I just wanted to use the opportunity to remind you again. So AASB 9 financial instruments is effective for this current financial year, 18-19. We're not expecting a massive impact for most entities, but there are some that do have a reasonable impact from that standard. The next two are probably the bigger ones. So AASB 15, revenue from contracts with customers. It's a little bit tricky because it's got two different application dates. So for those of you in the room that are in for-profit entities, you're applying it for this year. For not-for-profit entities, you apply it in 1920. Problem is CFS is not-for-profit, so it will not be applying AASB 15 for 18-19. So if you're a for-profit entity and there are differences between how you've previously recorded your revenue and how you would record it under AASB 15, Finance is going to be coming to you and asking you to include the numbers as if they were done pre-AASB 15 in your SRP. So that's something just to be aware of and be ready for. And if you've got concerns with that, please talk to Finance early. AASB 16 leases. So it's not effective till 1920, which seems like it's a long way away. But there's actually, if you haven't done much in this standard space yet, there's actually a heap of preparation work you need to do. So if you haven't started thinking about the leasing standard yet, I'd really encourage you to go back and start thinking about it now. I have heard that a few agencies were waiting to see if Finance was going to do something centrally. They've confirmed to me that they are not doing anything centrally in terms of a system. They will be having workshops and already have had, providing guidance, but they are not going to be procuring a system that every entity can use for managing leases. So you'll need to look at that on an entity by entity basis. So please spend some time on that. Again, Finance is going to be asking every entity to provide them the expected impact of AASB 16 as part of the SRP for 18-19, because they need to include in the CFS the expected impact of applying that standard in 19-20. So even if you're a Tier 2 reporter and don't have to include that in your own accounts, you're still going to need to prepare it to give it to Finance. So again, just be ready for that one. And the last one is AASB 1058, income for not-for-profit, which has a link into AASB 15 for not-for-profit entities, and that's effective for 30 June 2020. Last one is just wanting to let you know what you told us in terms of client survey results, which we received about a week and a half, 2 weeks ago. You probably filled it in a month or so ago, I would expect. So thank you to all of those who completed the survey. We had a response rate of 79%, so it was down a bit from last year's response rate, but still pretty good for a survey. We're currently reviewing the consolidated results and also looking at the individual surveys. So for those of you that completed it and said, yes, you can show a copy of this to the ANAO, we're looking at each of those individual surveys and particularly the verbatim comments that you've included to see if there's anything we need to address. In terms of the high level, I'll start with the positive results. So really high percentage agreed to the value that the ANAO provides, that our staff had the professional skills and the understanding of your organisation to conduct the audit, that the auditors explained the audit approach and conducted themselves professionally. I'm a little concerned about the 0.7% on the last one, but overall very positive results on those. Some areas that we can improve on though, and I'm guessing none of these will be a surprise to you as they weren't overly a surprise to me. First one is around timeliness. Well, a couple of them are around timeliness actually. So the consultation between the audit team and the organisation, so we had 8.7% disagreeing that that was timely enough, so that's something we will look at. Same about being informed on a timely basis of issues. That was 9.3% disagreed. Then around meeting financial statement deadlines, we had 8.1% disagreed in terms of meeting deadlines, but then only 2.1% disagreed the audit opinion was not issued in a timely manner. So I think what that's telling me is there was a real crunch at the end. We still met that final signing date, but there might have been a real crunch between when it was meant to finish and when it actually finished. So again, that's something we'll be having a look at. Also, whether there was adequate continuity of auditors on the audit, 8.8% said there wasn't. Not surprising to me based on, I know how much staff turnover we had, and it is something we're really focused on. We've just done recruitment rounds and I need some wood up here, touch wood, we are expecting to be fully resourced by 1st of Feb next year. So hopefully we won't have that same churn of people through your audits. That was everything I was planning to cover, but happy to take any questions on any of those topics or anything else financial statement related that you would like to ask me. No? Okay. I will introduce Jane Mead, who is the Group Executive Director for our Professional Services and Relationships Group.
Thanks, Carla, and good morning, everyone. I wanted to talk today just a little bit about the ANAO's quality framework. So as Lisa mentioned in her introduction, this is something that we've been spending a lot of time working on in the ANAO. It's something that's very important to us because it's really central to everything that we do, that we ensure the quality of our work, quality of our people, quality of the work that they do. And so this is something that is quite central. So having said that, quality is a core business investment for the ANAO. We see it as something that is just crucial to everything that we do. And what the Auditor General sees as really important is that when we conduct audits, we do that to the same standards that are required of the auditing profession generally in Australia and also the international public sector auditing community. Of course, there may be circumstances where things in legislation may prevent us from some particular requirements, but in the main, we follow the same requirements as the auditing profession. So our quality framework, I just want to give you a little bit of background on that firstly and talk about how the framework fits into our overall corporate plan and purpose. And then I want to talk a little bit about some of the things that we've been undertaking in relation to the framework, some of the reviews we're doing and what we're looking at doing going forward. So our quality framework is based on ASQC1, which is the Australian auditing standard that is applied by the profession, and that sets out the requirements for systems of quality control for auditing. So the same standard's applied by the firms. It's also an international standard as well. So the objective of our framework really is all about giving us the assurance that we're complying with all the requirements that we have for auditing. So that's the ANAO auditing standards, which are based on the Australian auditing standards. Also relevant ethical requirements, particularly around independence, is one that's really, really crucial to us, and any applicable legal and regulatory requirements. And really importantly, we also want to make sure that the reports that we issue are appropriate, so that, as Lisa mentioned earlier, that the opinions and conclusions, the findings and recommendations that we're issuing in our reports are actually supported by sufficient and appropriate audit evidence, and that they are appropriate. So we have defined quality in the ANAO. This is something that I guess a lot of people try and do over time, and it's something that's very difficult to do, but we've come up with a working definition of quality. And what we're talking about when we're talking about audit quality for our purposes is a number of things, and it's really tailored to the type of work we do and our context. So we see audit quality as the provision of timely, accurate and relevant audits. Key word there being relevant. I think that our audits are relevant for our key users, which is the Parliament. They have to be performed independently. Again, that's something that's really, really crucial in our context. And as I said, in accordance with all the requirements that we have and the methodologies that we've set up for auditing, and that those audits are valued by the Parliament. Again, seeing the Parliament as our primary stakeholder, we need to make sure that our audits being relevant are then also valued by the Parliament. And delivering a quality audit under that definition helps us to meet our purpose to improve public sector performance through accountability and transparency. So we've put that working definition there just to help us to make sure that the framework as we design it, the tasks we undertake as part of that framework and the strategies and policies we put in place are making sure that we address all parts of that definition and not always just purely looking at a standards-based approach, but also looking a little bit more broadly into the needs of the Parliament. This diagram is just an extract from our corporate plan on our website, and I just wanted to highlight in here where the idea of quality is highlighted in our corporate plan. So the corporate plan that we have on our website at the moment talks about 4 capability areas where we're making investments over the next 4 years to support us achieving its purpose. So those 4 areas are, and this is sort of highlighted by the capability area up there. So we've got the 4 capability areas. So we talk about the ways of working, we talk about data and analysis, and Jocelyn's going to talk a little bit more about some of our strategies for that in a moment. Workforce capability, and then the quality framework. So the quality framework is one of those 4 key areas of investment for us in ensuring that we meet our purpose. So it is actually highlighted there as part of our corporate plan. When we look at the enabling activities that we have, we also bring in the quality framework and the methodology there. And in looking at our risk management framework, a lot of that picks up aspects of our quality framework in terms of the policies that we have in place. So I just thought it was interesting to sort of pull that up and show you just where the quality framework sits in our overall strategy and corporate plan. So what does the investment in quality look like for the ANAO? So what we're doing is revising our quality framework and implementing that, and we've been doing that over the last couple of years. So I joined the ANAO nearly 3 years ago now, and a lot of my focus has been on looking at that quality framework and revising that to make sure that it is an appropriate framework for us, and we're continuing to do that. So some of the things that we're doing are incorporating more independent quality reviews, and I'm going to give you some further details on that in a moment. But the idea there is looking and sort of saying, okay, well, you know, a lot of people often say, who audits the auditors? And it's probably not appropriate that all that is done internally, that all our reviews are done internally. So we're looking at ways to get some independent external review of the work that we do, of the audits that we do, but also of our quality framework and our internal processes for assuring quality. So I'll talk a bit more about that at the moment. We are also developing methodologies. We're continually doing this. We have our fairly long-standing methodologies for financial statement audits and for performance audits. But as we venture into new areas, so for example, performance statement audits, which Michael's going to talk a bit about later, we develop new methodologies that sort of sit under the methodologies that we have. When we have new accounting standards, auditing standards, we continually have to revise those methodologies, and we also continue to revise them with better practice ideas and what we're seeing happening in the profession. Data assurance, which Jocelyn's going to talk about in a moment, is also another opportunity for us as an auditor, and we're at the moment developing our methodology of how do we really apply our methodology in a context where we're using a lot more electronic data. And we're also developing new workflow systems for our audit types to try and get some consistency there around the systems that we use. So I talked about our quality framework and the fact it was based on ASQC1. I just wanted to give you an idea of when we talk about a quality framework, what are we talking about? So people often think when you're talking about quality assurance over audits, they think about the internal reviews that we do, of the work that we've done, of the file reviews that we do, but there's a whole lot of other things that make up the whole quality framework as we look at it. So leadership aspects talks about things like tone at the top and who has the overall responsibility for quality, and for that being at an appropriately senior level of the organisation. In our organisation, the Auditor-General takes responsibility for quality and sets a very, very strong tone about quality in the organisation. Also coming into that aspect is the fact we do have a quality committee, which is a standing committee under our Executive Board of Management that keeps its eye on all matters to do with quality, so all the things that we're talking about here. Ethical requirements is really getting at the independence and ethics policies that we have, so the policies that we have to ensure that we are independent, both in actual independence and in perceived independence as well. Engagement performance is really all our methodologies and policies that we have around how audits are done. It's our review and supervision policies, our consultation policies, which becomes really important, particularly in terms of any contentious issues. So we have a committee that's set up to look at any contentious issues where we might have a disagreement with an entity on accounting matter, where we might be considering a qualification of an audit report or an emphasis of matter of an audit report. We have a high-level committee that meets to discuss those issues. Human resources, so this is all about our recruitment policies, our performance and career development, and our learning and development. That all forms part of our quality framework to make sure that we have the right people employed to do our audits and that they have the capability to do audits and that is renewed on a regular basis. Stakeholder relationships, so this is talking about our relationships with audit committees and also with the Parliament, so that's getting into that point about the audits we're doing being valued by the Parliament and being relevant. And obviously important relationships with audit committees is extremely important. I left monitoring to last because this is one I want to spend a little bit of time on. So this is the bit where I talk about who audits the auditors, which is often a question you get asked, I think, when you're an auditor. So I want to talk a little bit about how we do actually go about monitoring audit quality. So what do we do to make sure that all the policies we've set up in that framework, all the methodologies and the like, are actually being complied with by our auditors in the practice and also when they're out doing audits? So for some time we have had an internal annual quality assurance program, both in audits of financial statements and also performance audits. So what we have in that space is quality reviews of completed audits. So that's something we've done for some time. The group that I lead conducts those, so it is done internally but independent of the audit group. So my group is independent of the two audit groups. So to some point it is independent but not completely independent. And that's done after jobs have been completed. We go in and look at the files and assess the work that's been done against a test program to make sure that they have actually complied with our methodologies. We've, in the last couple of years, introduced hot reviews of in financial statement audit files. So what this means is that we go in and look at quality at various stages through the audit. So at the planning stage, the execution stage of the audit, and just prior to signing off. So what that does is, I guess that's twofold. So while it also helps us to monitor the quality on jobs, it means that if we do find any deficiencies in the audit, they can be fixed before the audit's completed. Which is really useful. We also use them as a coaching and mentoring tool, so particularly where we have new signing officers, we'll often select their files for these hot reviews so that we're able to use them as a learning process for new signing officers as well. So that's something that we've introduced. This is the third year that we've applied hot reviews, and we're going to continue to do that. And as I said, what we're looking at is making sure that our conclusions are supported by appropriate audit evidence. In selecting the files for review for these inspections, we rotate through our engagement executives so that if for performance audits, each engagement executive will be selected for review every 2 years. Financial statement audits, because we have in-house audits and we have audits that we contract out to firms, each engagement executive will have files looked at two files looked at every 3 years, so one in-house and one project managed audit. In terms of our contractors, we also rotate the contract firms that we look at to make sure that we're actually looking at the work of all the firms. When we're selecting which audits we'll review, we consider risk levels, we consider size, we might consider where we've had findings in previous audits as well. And the Deputy Auditor General approves all of those selections for review. External reviews is the area that we're really trying to ramp up. So a couple of things we've already got in place that I just wanted to give you some information on first. So for our performance audits, the New Zealand Office of the Auditor General conducts peer reviews every second year for us. So we go on an alternate year basis and we go and review them every other year. So the New Zealand Office of the Auditor General, very similar to us in terms of their requirements, their regulatory framework and the like. So they're coming in to assess whether our audits have been conducted in accordance with appropriate methodologies, but also to give us some recommendations for best practice as well, where we can share some information on areas that we're looking at. So that becomes really useful. And the report that we get, we've actually just had one fairly recently when New Zealand have come out here and done a review. When that report gets finalised later in the year, that will be placed on our website. So we're quite transparent about the results that we get in these external reviews. Lisa mentioned briefly that we had ASIC come in and do a review on this is on our quality framework and our financial statements audits. I'll give you a bit more detail about that in a moment. And the other area I'm going to talk about is the external auditor. So in terms of the ASIC review, as you're probably aware, ASIC are the regulators for private sector auditors that conduct audits under the Corporations Act. So they, for a number of years now, for longer than I can remember, have been doing reviews of the firms that conduct audits under the Corporations Act, and they release reports every 18 months in respect of those reviews. So what we did was we engaged ASIC to come in and do a review, firstly, of our quality framework to make sure that we did have the appropriate policies in place to be in compliance with ASQC1, and we also got them to look at 2 files of financial statement audits. We asked them to use the same program that they would use for a private sector firm so that we're getting that same level of review done. And they reported on some findings and some recommendations, and that report is on our ANAO website. We found that a really useful process to go through. We believe that it gave us a good level of accountability and transparency about our quality, so we are going to continue with doing those reviews on an annual basis, and ASIC will be coming in again over the next few months to conduct some more reviews for us. Finally, we do have an auditor ourselves, just like you. As well as doing our financial statement audit, PwC conduct those audits. As well as doing our financial statements audit, the independent auditor also does some performance audits. The last one that's been reported of was a review of cybersecurity, and they're currently in the process of reviewing our methodology to audit performance statements. Should also mention that this year, when the auditors looked at our financial statements, they also audited our performance statements as well and reported on that. So all of the reports from our independent auditor are also on our website. Lastly, I just wanted to talk about some directions we're looking at in the future to continue ramping up the work in our quality framework. So we're looking to increase those external reviews because we do find that external review, as I say, very good for accountability and transparency, and we also learn a lot and get some better practice recommendations from those. So we want to do some more in the performance audit space as well as the financial audit space. As I said, we're going to continue to have the ASIC reviews conducted annually. In performance audit, we're looking at what those external reviews might look like. So it might be that we engage a panel through the ACAG network to look at the quality of our reports, so actually looking at the reports themselves as opposed to compliance with methodologies. And then also looking at appropriate people to come in and do external reviews of both the reports and the compliance. So that's something we're working through at the moment. That's a quick whip through our quality framework. Just wanted to give you a bit of a feel for how we actually go about assuring our own quality. We're out there always looking at your quality. We just wanted to give you some assurance that we do actually look at our own and we do actually audit ourselves and make sure that other people audit us. Did anyone have any questions on any of that? Yes. Well, I got the first question of the day. There you go.
It's Jeff Brown here from Defence, and this is a little bit biased for Defence, and I want to preface the question by saying we are working closely with the ANAO on this issue, but changing the way we approach the audit, we being the collective ANAO Defence, and moving to the issue of doing a hard close in advance of the actual year end, knowing we've got issues around our assets, around fair value and then depreciation, a whole lot of complexity. Is that a space that, I guess this is a broad question to the ANAO, not just yourself, Jane. Are the ANAO receptive to move?
Apparently you can't hear me. Are the ANAO receptive to looking at these more, I guess, it's not novel, it's quite common in the private sector from where I started my life, but looking at different ways of doing it to actually bring forward that reporting time. I mean, November 15 is pretty late, and I know there's a lot to be done. It's a huge amount of consolidation in terms of the audit. But where we can actually bring forward that reporting and do that work up front gives us a little bit more scope to then engage more wholesomely with you at that 30 June period. Those sorts of things being looked at, and I can tell you now that the AAS 15 and 16 are going to be huge issues. I mean, not just for us, but for a number of entities as well, and where we can start to get better clarity around those issues as well. The earlier the better.
Yep, no thanks Jeff, and appreciate the question. I'm actually going to hand over to Carla as Head of Financial Audit to answer that. I guess the overall answer is yes, we are always looking for ways to firstly improve our efficiency and to help the audit process, but I'll let Carla give you some more detail.
We definitely are. So we have a reasonable number of entities that already do hard closes. Some do what you might have traditionally seen in the private sector as a hard close. Others, we agree certain line items that they're going to do early. And we've actually found that works better in a lot of entities than a full hard close, because if you've got a lot of, say, fair valued assets, you might want to do that valuation as at the end of April or May, and we can do work on that earlier, and then there's a lot less work that needs to be done at 30 June to make sure those valuations are still valid. So I think there's sometimes more benefit in targeting particular line items rather than spending time on the whole set of accounts, but that will vary entity by entity depending on the issues in that entity. But absolutely, we want to try and find as many ways as possible to bring the work forward so we're not all crunched at the end. And also, if that PGPA Act review recommendation gets up about early tabling of annual reports, we need to find ways to bring it forward. Yep.
And I guess to add on the new standard stuff, if people have got position papers and the like that they've produced or that they've engaged with experts to help them to produce, we'd be happy to look at those sooner rather than later. So if people have got their position ready, happy for them to talk to their engagement executive to actually forward those to us prior to the audit commencing so that we can actually consider those positions early. Any other questions? All right, I'll hand over now to Jocelyn Ashford. Jocelyn's the Senior Executive Director responsible for our Systems Assurance and Data Analytics Group, SADA, and she's going to talk you through something really exciting that we've been working on, which is a pilot in the data analytics space.
Good morning. I'll just see whether I'm challenged with this as well. I am IT, but never mind. Okay, good morning. So the last time I presented at this forum, I discussed the ANAO's data analytics strategy and the associated initiatives. Today I wanted to provide you with an update on one particular initiative, which was the data analytics pilot at the Department of Infrastructure, Regional Development and Cities. You remember that I discussed about our current approach and how we were looking for ways to improve timelines, do things more efficiently, and also how we're going to continue to evolve quality or improve or enhance quality as well. So I think the last time I talked about multiple auditors or painted a scenario about multiple auditors harassing you, which is a comment that we sometimes get, collecting a lot of different type of information in a lot of different types of formats at a lot of different types or times throughout the audit cycle. So there's obviously some opportunities here for improvement in terms of efficiencies, and that's what I suppose the challenge or the opportunity that's been put to my group is, what can we do, where can we automate it using digital technology now? So this is really audit analytics, and what our objective is really to extract data at a single point, a clean set of data that we're able to then use for multiple purposes, and to do that internally so that we're also leveraging off that information on a regular time frame. So you can see there that those are the overall objectives of the audit analytics pilot. Clearly, it's all about reducing, well, also one of the considerations is about reducing our footprint, and I thought I'd better automate that, given that that's what the data analytics is all about. So that's, I suppose, one of the value-added things for you is the more that we utilise digital technology and engage with you on extracting data and using new tools, we can reduce or make the footprint more effective. So just a little bit about the pilot. With the pilot, we particularly targeted general ledger transactions in the procurement space. So basically supplier and vendor expenses, and it didn't matter what the source was, whether it was a credit card source or whether it was your normal process in terms of putting it in. We looked at the department, in particular we targeted SAP as well, so SAP, also because it's quite a standardised process within the Commonwealth. So what we're looking for is a repeatable process using data analytics. What I thought I'd highlight is probably some of the learnings in the initial stage and I suppose provoke some thoughts with you about how you would prepare yourself or become a little bit ready for when the auditors come in to start to use data analytics on your audits as well. So a couple of the things, I suppose the most essential element is engagement. It requires a commitment to collaborate between the ANAO and the entity. And it's also about investing in future gains as well. So I think if we keep those sort of objectives in mind, it goes quite well. The collaboration is also not only just internal to the ANAO team, so it's a collaboration between IT audit, financial statements, our technical team to make sure that everything that we develop and design complies with the standards, but it's also a strong collaboration relationship with with infrastructure's IT team and finance team. So all the players have to be in the picture to get the right outcome. We've got some learnings there. We probably underestimated, even though the Department of Infrastructure has always been quite eager to facilitate data analytics, it still takes a little bit of time for everybody within the organisation to embrace that we're going to do audit in a slightly different way. So that's probably something that we took away, that there was some, even when we have a strong relationship, there's a lot of work that needs to be done to make everyone comfortable and to realise that we're really not changing the nature and the extent of how an audit procedure is executed. We're just changing the way in which we're collecting the data and enabling the auditors to get to the risk assessment point quicker. So I suppose I just wanted to assure you that our data security has always, the data that we've always collected and continue to collect under this pilot has always been in accordance with our information and security requirements. Nothing's changed there. We still treat it sensitively, we still store it appropriately, we still classify it appropriately, and we still comply with your own security frameworks as well. So, but that still takes time through the engagement, to make sure that everyone is still comfortable, because people seem to be more comfortable with providing reports, little tiny extracts, than suddenly giving you an extract from a table, even though it's exactly the same data. The extract process, I really should label this as data discovery, because in fact the extract of the financial transactions that we undertook in the pilot was very quick and very easy. We had a script, it took 3 minutes to run, it pulled all the vendor data, the financial transactions out, very efficient, very effective. The time-consuming and the area where we need your investment, or the financial team and the SAP team's investment, is really in data discovery, is understanding the nuances in your business process. That's reflected in the data, because we're now at a very low level, we're down the very, very lowest detailed level, and you need to understand what that means in the context of your business, so that whatever we develop reflects it correctly. So that was probably the most intensive area. So out of the period of 5 months that we've been doing things, I would say that between the engagement, which was probably about 3 months to get us from start to go, this is probably a month of intensive activity by my team working through what's the data mean, and is it right in the context of the Department of Infrastructure's business. This was the quickest and easiest. I have a group of really bright, intelligent, young programmers and developers who want to play with the latest tool. So in fact, this was the easiest area of the pilot. It actually took, in elapsed time, 5 weeks of development activity from woe to go. And that included, as you'll see in a later slide, the process mapping, which is a more complicated programming technique that they've done. But the key point here is that it's an integrated team. So we actually needed both the IT auditors, the financial statement auditors. We needed also the client, as in the Department of Infrastructure's SAP team, working with us to make sure that what we were building met both the auditing standards, but again reflected the business of infrastructure. One of the learnings that we learnt is don't design and build at final. So that's a lesson. We won't be coming to you at your final audit cycle. So where are we at now? So the team is actually using this tool that we've developed at the moment for planning for the Department of Infrastructure. So we've done all the development, and they're now executing it. And they're measuring, they've designed the success factors, and they're measuring those as they're going. So we're really going to be able to demonstrate what are the efficiencies or the quality attributes that we've been able to gain, both from the client, as in the Department of Infrastructure's perspective, but also from the audit perspective as well. So probably at the next CFO, we'll sort of talk about how more efficient was the process, or what did it actually mean by using data analytics in audit. So this is, I've just put a couple of snapshots of the tool. Probably one of the most exciting things was the process mapping. So that's the very top picture. I've made it small so you can't see actual infrastructure's data. We're managing their sensitivity around data. But nevertheless, the very first picture that you do see here is we've taken 3 years of financial transactions around vendor and expenses. We've built a process map that is repeatable. So every time we extract, it gets ingested and it redesigns the process map. So when you think about the efficiencies that that gives to our audit team, is that based on actual data, they can actually confirm what the transactions did. Did they actually comply with your control framework? And does this process actually follow your accountable instructions? So what that actually means that the audit team, when they come out to you to do walkthroughs, can actually say, these outliers, one, are they material? Should I really worry about them? Or because they're aberrations, let's actually target our questions to those particular areas, because we know everything else, the darker lines, went through your normative process. So that's a huge benefit in terms of the planning cycle, being able to understand your business process faster, and being able to then target the questions when they do walkthroughs around abnormalities. The other thing that we've also done is provided them with dashboard functionality. So again, this allows them to check 3 years of trend data and allows them to cut it in multiple ways. So they've been able to, they can do a snapshot of information, so it tells them sort of demographics about your financial transactions, which is needed as part of planning. It also allows them to discover and analyse the underlying data, so all of the filters that are actually in place. They can go at multiple levels, so from a very high level, they can look at different company codes, they can go right down to the actual transactional line, and they can also look at the materiality. So in a snapshot, the auditor can go or make judgment calls about, is that material, do I need to follow it up, or filter their sampling based on materiality. No. Well, and that's a very interesting point, because certainly the Auditor General, when we've discussed data analytics, he has an expectation that management, as in the entities, are doing this type of analytic. So these have been designed specifically for the purposes of audit, and so we're only doing analytics for audit purposes. But this type of functionality is readily available. There's lots of tools that you can do, and as I said, the build time was 7 weeks to get to this particular point. So I suppose I would encourage you to invest in analytics, because it does give you the ability to quickly see what is occurring in your organisation and to filter down to potentially risk or problem areas. But the key point here is that this tool has been designed, again, for audit purposes only. So again, as I mentioned, at any point in the tool, it allows the auditor to be able to cascade down to the lowest transaction. So really, the tool enables or assists the auditor to be able to quickly gather insight, discover what they need to do, and to actually target their audit procedures or their questions to the entity. So we do see that this has real value moving forward, and we're keen to make sure that it realises some real gains both from your side and our side. So way forward, this is the Department of Infrastructure. We're already in play. We're doing a continuous extract. We focused on supplier expenses and vendor accounts. We're now going to start to look, because we've bedded that down, we're now going to start to look at other financial statement line items such as grants or revenue streams. In relation to you, we're looking at SAP entities first, and we're looking at rolling out the tool once we've got, I suppose, our reporting around how successful the pilot is. That's one of the key decision points. We would be targeting SAP entities, and we would again be targeting the procurement stream. So we want to use the tool that we've developed in a repeatable process. But again, I suppose the key points that I've highlighted around engagement and preparation, start to think about it now, because it's not if, it's when data analytics will be used. So you'll see that we'll start exactly the same small bits and pieces that we did with infrastructure with you, and start to sort of build on the knowledge of your entity and how we can use analytics specific to your entity. So that sort of is a very, very quick snapshot of what we're doing in the data analytics space. We're pretty excited about it. As I said, my guys like to play all day in this space, but they actually need to deliver it for the audit purposes. But if you had any questions, I'm happy to take some questions. No? Yes.
Yeah, Scott Brown from Department of Agriculture. We're starting to play in this space, which goes to the lady's question. I'm keen to understand, are you pulling data from different databases, or are you just pulling it from the general ledger, just out of interest more than anything?
So in this case, we pulled it from the GL. As part of the way forward, that will be multiple data sets. So the intent is to start to blend the other data sets from other applications, so you get an end-to-end process. Yes.
Because I think there will be overlap between, if we have departments doing this sort of work and you guys doing certain work, I think there could be opportunities. I realise that you've got a particular purpose, but the tools will be the tools. For example, we're looking at pulling data from different data sets, not just our FMIS system, but from some of our other systems to get more rich data. But I think in the long run, there will be opportunities for us to work together because I think a lot of the tools and the skill sets are the same. It's just the purposes of what data you're pulling is just different.
I agree. And so, as I said earlier, the Auditor General has made comments that this is what management should be doing around their business and their financial transactions. So where an entity has tools available and are already doing it, the auditor will already examine that. The thing that the auditors have to consider, though, is how to assure the completeness and the accuracy of any of the data that gets pulled from multiple data sets. So it adds new audit procedures onto it. And so I suppose that's the balance is it more effective using your tool when we have to do a number of different assurance points, or is it easier for us to extract knowing the completeness and accuracy of the data and put it through our tool? But that's the area of, I suppose, conversation and engagement. And also part of the methodology that we're working through as what do we do in that sort of space. But we're very keen to work with agencies. Any other questions? Thank you. I think I was between you and morning tea. So I think we're going to have a break for 15 minutes. Back at 11:20.